Okay, so we are now live. Welcome, everybody. If you are a service based business owner with employees or contractors, this episode is especially important for you. A lot of the headlines around the 2025 tax law focus on tax savings, but what they're not going to really tell you is the implications of how business owners are going to have to show up when it comes to reporting payroll, worker classifications, and compliance. Today, I am really excited because I am joined by my friend and HR professional extraordinaire, Necole Matlock. She is here to help us go through this stuff and dissect it. She has over 2 decades of experience in the HR industry. And so she knows what she's talking about when she tells you, how these things are going to really affect you as a small business owner. From both an HR and a tax perspective, we're going to really attack these different things and help you guys to really understand that sometimes when Congress, in their wisdom, tries to help us as taxpayers and give us different, I guess, incentives or different ways that they're trying to help us on our taxes, sometimes there are implications or problems that can arise for small business owners who are the people who have to report on all this stuff. So this conversation is meant to be educational in nature. We are not trying to make anybody an HR expert or a tax expert, but what we are trying to do is help you guys to get the information you need so that you can develop better questions, ask great questions, and be able to avoid mistakes before they happen. So, first things first, the two things that are in the tax law from the 2025 tax law that I know that so many taxpayers are so excited about. And that is number one, no tax on tips and no tax on overtime. And so I know you guys have already heard all the stuff about how, this is going to make things so great for taxpayers. But look, I'm here to talk to the to the owners, to the business owners who are going to have to, actually report on all this stuff and what that looks like. And so we want to make sure you guys are careful about the fact that, number one, you're not trying to reclassify people so that they meet the criteria. We're trying to make sure that you guys are just doing things in a way that's not going to get you hemmed up at the end of the day with an audit from Department of Labor or from the IRS. And so I have a series of questions that I'm going to go ahead and pose to our guest here from Miss Necole. And we're going to go back and forth and just help you guys to really get a better picture of maybe where you stand. And if at any time you decide that, I just need more information, at the end of this episode, we are going to have down in the show notes some links for you guys to click on so that if you need to get additional help, you can either get that from myself or you can get that from Necole and from her team as well. So first off, actually, Necole, what I would like you to do really quick is just to give us a little bit of information about you and about your firm and, where you're joining us from and all that kind of stuff. So go ahead.
Sure, absolutely. My name is Necole Matlock, and I am the founder of Strategic HR Development. And we are located in Chicago, Illinois. So I'm checking in from Chi-Town. Yay. And and so our HR consulting firm does things a little bit differently. We really focus on the business owner based on their journey, whether you are workforce ready, looking to hire your first employee, or you're looking to hire a staff that you're able to retain and attract top talent. And then the other part of the business is if you're looking to scale your business, how do you do that effectively? How do you do that with the right people in place and removing yourself from the day-to-day processes in the business? And the other piece of that is if you're looking to sell your business or exit for retirement, to start pulling money out of your business from that perspective. And we work with business owners to do that HR due diligence. And I always tell my clients, when you're looking to sell your business, it's similar to buying a house. Are you buying a fixer-upper, or are you buying a move-in ready? Same as your business. So making sure your people, processes, and systems are in alignment at each stage of your business really will help at that end result. And we also ask our clients looking at their business to look at their business with the end in mind. So as you start your business or you are in the midst of your business, what do you want that to look like at the end of your time working or owning that business? Are you going to sell it? Are you going to pass it on to a family member? All of those things we help prepare for.
Okay, awesome, awesome.
Yeah.
And the truth is, there are a lot of folks out there that are trying to get their businesses structured so that they can, sell them, or they, want to be able to create that legacy type of environment where they're, they want their business to be handed down, and they have family members that actually want to do the business and are willing to keep that going. So that's really, those are some really great insights and ways that you can really help people. Okay, so question number one from me. So from an HR perspective, why are payroll and worker classifications such a big deal, when, especially like as in light of like how this new tax law is trying to, it almost makes it seem like it's trying to get people to make more people employees, which, from what I understand, that's not necessarily a bad thing, but around like actually even classifying the kind of work people are doing, or how they're getting paid. Like, how does the HR perspective help with helping small business owners to figure out like how to do payroll, how to classify their workers, and how, I mean, and really, I mean, a lot of people might think, okay, is this really a big deal, or people are just pumping this up?
Yeah, no, actually, it is a really big deal. And in terms of classifications, that is probably the number one problem that business owners face, because as they start their business, and they start as a small business owner, so they may hire their family member or friends. That's typically how it starts, and then they hire people as like we'll just hire you as a contractor and give you make you a 1099, and we'll pay you cash. Or I even ran into a client just recently where they were zelling their employees their paycheck, and they were all paid on 1099. And I told the client that you're running into a big risk, because these aren't officially 1099 people. They're actually employees of you. And then he was like, well, no, because we're project based and is based on how many jobs we have. And I said to him, it's like, well, yeah, that's great, but you call them today as 1099ers, but if you were audited by the IRS, they will call them employees, and it's going to cost you a lot of money to fix this. So let me tell you what an employee actually is versus a 1099 contractor.
Yeah, definitely, definitely. That this is going to be really important, guys. Pay attention to this.
Yeah, right. So a 1099er, like a contractor, is truly what that is. They are working for you for a period of time. For example, if you have someone working for you, a full-time employee, right, and they were hurt on the job, or they were hurt, or they went to have a baby or whatever, and they went on a medical leave. You brought someone in for on a temporary basis to cover that person, maybe for 30 days, and they're only assigned to a certain level of work, and it's completely contracted. That particular contract will run out. That is truly a contractor. You're not necessarily telling them they have to be there from 8 to 5. They make their own hours. They make their own lunches, their own lunch schedule. They just do the work. You are paying them as a 1099, giving them cash pay, whether it's through their social security number or if they have an EIN number. Most importantly, if someone is contracting with you, you really want them to have an EIN number. That kind of really cuts the red tape, and it saves all of the questions, right? If you're paying them on their social security number, then that may be classified as a temporary employee, right? So it's like temp to hire, or temporary person to come in and do a job for a particular amount of time. So there's a fine line between the two, but a lot of business owners look at that as, well, I'm going to pay them on a contract basis. And I just want to caution everyone to be very, very careful of a contract basis. Are you requiring a person to come in at a certain particular time of the day? If you say that I'm going to set your hours from 8 to 5, that is an employee. If a contractor says, I will do this work based on this is the completion day, that's a contractor. There is a difference. So, and why is that so important right now? Because the Department of Labor and the IRS is really, really cracking down on small businesses, and they've been doing
Mm.
that for some time. And once they come into your doors, the fine line is it's not that they're just going to come in and look to see if your people are classified. They're going to double tag team this thing, and they're going to want to see all your employee records. They're going to want to see your offer letters. They're going to want to see your policies and procedures. So if you don't have all of those things set in place, then you just opened yourself up for a really bad day.
So what I also hear you saying is that, and I think this is the underlying thing is that, when Congress puts in place new laws, sometimes it also triggers additional compliance,
Yes.
additional reporting. And so as business owners, because at the end of the day, I'm a small business owner. I mean, I'm an accountant, I'm a CPA, but I'm also a small business owner, and so are you. And so
Mhm.
at the end of the day, they're going to be looking at small business owners a lot more just because there's all these additional compliance rules now in place where they got to double check to make sure that the employer is doing these things correctly with
Mhm.
this new law. And so unfortunately that's going to bring attention to everything that we do, including how we classify our people, whether or not they are actual temp workers or are they actually just temporary employees who really should be W2. Like all of that now goes under scrutiny. And so I think that's something that people really need to be paying attention to, that, these additional compliance rules are not going to just bring attention to, like, whether or not you have eligible uh overtime or whether or not you have eligible, you know, um tips, but it's also going to bring attention to like the whole picture. And once they get in the door, they're going to look at everything.
Exactly. And another thing, the good thing that you mentioned overtime, another thing that small businesses run into, a problem that they run into, which they don't realize that it's a problem until it's a problem, right? Is I don't pay overtime.
Yeah.
And I
Yeah.
have a story about a client that I met that didn't pay overtime. And it was in
Mm.
the policy, it was written everywhere, and they thought it was okay because they didn't pay overtime. Well, they were cordially invited to an audit, and the auditor found that.
Wow.
And they said, "Well, we don't pay overtime." That was their response to it. And and the auditor said to them, you don't have the right not to pay overtime. If an employee is working 40 hours, greater than 40 hours in a work week, then you are required by the law to pay overtime. It's not
Wow.
at your discretion. So I want to make sure that business owners truly understand that it is not at their discretion whether or not they choose to pay overtime. The only way that they can guarantee no overtime is make sure that their employees are working 40 hours or less in a work week. So, and that costs my client an awful lot of money because they go back 2 years. So I can help as an HR consultant. I can dig in and get in front of things, get ahead of things before the auditor actually comes in, or even while they're there, because I've been doing this for such a long time. I understand what they're looking for. But there are certain things that I can't correct because it goes back 2 years. And if you've been doing the same behavior for 2 years, again, it's every fine is a violation, or every penalty, or every correction is a violation, and there's a cost associated with that. And it's a penalty per violation per employee. For example, if you have 100 employees and you have 100 violations on that one employee, times that by the amount of employees you have, and there's a price tag attached to every violation. So you can get to a situation where it can eventually close your business down because you can't afford to pay the violations.
And it's interesting that you brought that up because that was actually something I did. I did some research once, and we found that in general, within a 5 year span, 50% of the businesses that go into business in year zero, they will be out of business by year five. And
Mhm.
an interesting statistic on top of that is that of those companies that go out of business, something like 60% of them will have some sort of payroll violation that is attributing to them being put out of business. So yeah, this is big stuff. It's not something that people need to take lightly for
Yes.
sure.
Yes. Yes. And I actually have a question for you
Sure.
along those lines. Is so from a tax perspective, what happens when a worker's classification is wrong? How does that affect the employees in their taxes?
Yeah. So honestly, there's a couple of different things. The first one is that, as you kind of alluded to earlier, the IRS and the Department of Labor will basically tag team you.
Mhm.
So, you know, if one of them has an audit on you and they find any of these violations, they're gonna tell the other entity.
Yeah.
So that's number one. You're gonna end up with basically not just the Department of Labor or the IRS, you're gonna end up with both in
Mhm.
your on your front porch, right? So
Yeah.
that's the probably the first thing. The other thing is that, of course, when you have somebody who's a contractor and they're a legitimate contractor, then as an employer, you don't pay any payroll taxes towards that person. Well, if that person is found to be misclassified, then what ends up happening is, according, you have Social Security and Medicare, right? So in a normal situation, the employer would withhold 50% of that Social Security Medicare. So that's 7.65%. You withhold that out of the person's check.
Mhm.
Then you have the the employer's portion, and that's 7.65%. So it's a matching, right? Well, when you make a mistake like that, what actually happens is the employer becomes actually liable for both halves. So now, whatever amount you paid that person, you have to pay an additional 15.3% to the IRS rather than being able to withhold half and then have the other half matched. You get to the privilege of paying the whole amount on behalf of your employees. So it definitely has that same issue that you were talking about, where it can be really devastating, the amount of um, penalties and all that. But on top of the penalties, just the taxes alone that you are going to be back assessed in
Mhm.
arrears over whatever amount of time. And the interesting thing is, I know you mentioned 2 years for the Department of Labor. Well, with the IRS, it's generally 3 years. However, if they find a pattern of behavior, they can open up to 7 years. And if it's considered to be negligence or gross negligence, there's no limit on the number of years that they can go back, especially if it's considered to be tax evasion
Mhm.
or tax fraud. So it's one of those things where it's like, in the employer mind, right? As an employer, as a business owner, you could be thinking, oh, you know what, we really need to save money on our taxes, so I'm just going to make everybody a contractor.
Mhm.
And you may be thinking that innocently, not really thinking, "Oh, I want to evade taxes." Like, that's not how people think. People are not thinking, "Oh, I want to evade taxes." No, they're thinking, "Man, how can I cut my tax bill? These bills are killing me. How can I do better with the bills?" That's really what most people are actually thinking.
Mhm. Mhm.
But unfortunately, that type of thinking can lead you to have actions that really could be reclassified as tax evasion or tax fraud. And so it's really important that you have people around you that know what the law is, know how it applies to you. And guys, ask questions.
Yes.
Don't expect your tax person to just by osmosis know what you're thinking or what you're doing or how you're running things,
Mhm.
and just assume to ask questions, because with a lot of tax preparers, when you say, "Oh, I got contractors," you know what they say? "Okay, great." They don't ask any more questions. They don't check to see whether or not you have people classified properly. They're not, warning you about the law. They're just going to say, "Okay, great." And they're going to move on with their life.
Yeah.
So you guys got to ask questions. You got to ask questions.
And if I can jump in really quickly and add just two more points to that, and as we talk about classifications, one that I failed to mention is as a small business or even bigger business do this as well. They classify all of their employees as salaried when they should be hourly to prevent paying overtime. So that's another key to watch out for. An hourly employee doesn't have the ability to make any decisions. They don't have any managerial experiences or responsibility or supervisory experience or responsibilities. That's a true hourly employee. You need to pay them hourly. Salary employee are key holders. They make decisions. They dictate performance measures and things like that for other employees. That's another thing. Be mindful of that. And a lot of time I hear business owners, small business owners saying, "Oh, HR is just big. They're for bigger companies. I don't really need them." And actually, an HR consultant is someone that you really need at a smaller company because bigger companies have people there watching out for these things that we're talking about, whereas the smaller businesses don't really have that. And you have to engage someone to be able to ensure that you are in compliant and it won't come back to bite you. So a CPA and an HR consultant can be your best friend. It can be your best partners and it can be the best money you've ever spent because it really is cost savings in the end. It may not feel like it now, but it will save you a lot of money, headache, and potentially your legacy, which is your business.
Most definitely. And it's interesting that you mentioned that too about the misclassifying people as salaried or, trying to get out of paying overtime. So, every state is a little bit different, but even here, like I'm in Georgia, and we actually had a situation once when I was an employee. I was actually a manager, and we had uh I guess she was like a receptionist. Yeah,
Mhm.
I think that would be the best examples, best description. I mean, she did a little bit of secretarial work, but it was mostly receptionist. And, the job wanted to pay her a salary so they wouldn't have to pay overtime.
Mhm.
And the Department of Labor has a pretty extensive list. Your state Department of Labor and the federal Department of Labor, they have a pretty extensive list of the types of positions that do and don't qualify for that. So even though she was on salary, if at any time she didn't work enough hours, she still got her salary. But if at any time she worked over hours, they were obligated to pay her overtime, and comp was not, was not an option. Like
Mhm.
because I've seen people try to use comp work or comp hours to try to get out of it as well. And at the end of the day, is like, no, you have to pay her that overtime because the Department of Labor says so.
And that's
So
how,
it's not a choice.
yes.
Yep. So I definitely I get it. And unfortunately that company, the owners were not happy about it. But when we were able to show them like, okay, look, this is, granted at the time I think I was a internal controller. I was like, look, I get it, I understand, but this is what the law says. And if you do anything outside of this, just understand that you're putting a target on your back. So you could pay now or pay later, but
Mhm.
either way, you put yourself in a position of having to pay. So yeah, definitely understand that. So what are some of the most common mistakes that you see business owners making these days? Especially like, maybe like some of your smaller business owners when it comes to contractors versus employees, and also when it comes to even classifying the different types of income that they're paying out to their various types of employees.
Yeah, the biggest thing is making everyone a contractor, and that is probably the number one thing that gets businesses caught up in that loop of audits. And then they say, well, we're just a small business, and this is my family, and so my family
Mhm.
works for me. Your family are employees, and the other piece is not having workers' compensation insurance. Workers' compensation insurance is so important, and I tell my clients that if your brother was hurt at work and he can't work and needs to make money, he's not going to say, oh, well, that's my brother, so I'm not going to file for workers' compensation. And,
Yeah.
that actually happened where a relative was hurt on the job
Mhm.
and wasn't able to work because they actually broke their shoulder. So
Oh,
they
wow.
needed to, unfortunately, right? So
Yeah.
they needed to pay bills at home, but because it's a family business, they're not going to still pay a paycheck because they're hiring their family to be able to save on payroll costs, right? Labor costs, right? And so this person actually went to file unemployment that the company didn't have. So it opened up a huge audit for them. And then they went to file for unemployment, which because the person was being paid a salary or cash under. So there was no
Mm.
unemployment to capture. So it ended up costing the company so much money where they were contemplating on whether or not they had to close their doors. They were able to get out of that situation, but it's a scary thought that you think of a family member wouldn't do that. And they're not doing anything wrong or anything malicious. But just like you have bills to pay and you have a family to feed. They're just trying to figure out what can I do to
Yeah.
help me through this tough time. So those are the bigger mistakes: not having unemployment, insurance, and again going back to paying people under the table or paying them cash because I'm just a small business and I don't have this or that, and then people are still looking for some money in their time of need.
Yeah. Yeah, and I've seen that actually happen a number of times as well, where we have people who, and it's interesting because in one of the cases, the employee, who was listed as a contractor, went to go file for unemployment, and it was interesting because this particular employee had worked for like several different companies, and those other companies, they were a W-2 employee. And so when they went to go file for unemployment insurance, it wasn't like they put down my client's company maliciously, like, oh, ha ha ha, I'm going to get them. Like,
Exactly.
no, they were just like, oh my gosh, I'm out of work again. I need to get, I've done all this temp work. Let me put down all the companies that I did temp work for.
Hmm.
And my client's company was one of those companies that they did temp work. Unfortunately, my client's company was the only company that did not have this person as a W-2 employee and did not pay unemployment. And so, unfortunately, they ended up getting caught up in that. And as their CPA, I'm not involved in their day to day. I'm a third party CPA. We do their taxes, we review their information, but we get everything after the fact. So by the time I even was aware that they had hired this person in this way, it was
Hmm.
too late, and they never asked any questions. They never came and said, "Hey, Maya, I'm thinking about hiring this person, blah blah blah." And so unfortunately, it ended up not being. I mean, they didn't go out of business or anything, but it was very uncomfortable, and it was a very, um, I think, almost traumatic kind of experience for them because, yeah, they really just weren't prepared for that person to go to the unemployment office. And the Department of Labor was playing no games when it came to making sure that that employee was taken care of and that
Hmm.
their family was taken care of. So, yeah, it's easy to get caught up, I think, unfortunately.
Yeah, the back pay is no joke.
Yeah,
Yeah.
most definitely. Most definitely.
So
Um, let's see. So I do have a couple more questions for you. Did you have any other questions for me?
yes, I was going to ask you. So why is doing something for tax reasons often the wrong way, the wrong starting point for a business owner?
What I have found is that it kind of goes back to that sentiment that I said earlier, where people say, um, "Man, I've got to save money. I got to save money. I'm a small business. I can't, be overspending, and I can't overspend on my taxes. I can't overspend on any of my expenses because I'm a small business." And so, I think when you approach it from that standpoint, you put yourself in a position of basically incentivizing yourself to not make the best decision, but to make the decision that's going to give you what you think are the most favorable tax results.
Mm-hmm.
And that can be pretty dangerous. It can incentivize you to put yourself in a position of double dipping and basically, applying, get basically taking a deduction twice. Or it can put you in a position of misclassifying an employee, like we said earlier, because you don't want to pay the Social Security and Medicare. It can also put you in a position where you have the IRS or the Department of Labor questioning not just how you classified people in this one specific situation, but also your case history and what your pattern of behavior is, and whether or not you have been classifying people incorrectly. So, of course, that's an issue. And honestly, I think that the better approach is, and it's interesting because there's actually a really easy solution to the problem.
Mm-hmm.
And we actually just went over this with a client recently. So let's say he was paying out um $50 an hour, and he was doing that for his contractors, right? So what we did was we basically found out that there were a number of his contractors that, and he had a lot of them actually, but we found that a number of his contractors actually were functioning as employees. And so when we held them up to the test, that the standard that the IRS and the Department of Labor have, what we found is that really these people are functioning as employees. And at the end of the day, if they file with the Department of Labor, whether on accident or on purpose, and they include this client as one of their employers, or if based on them being a contractor and the IRS even auditing them and then going back and having basically an audit by an audit that's kind of like related party audit, they end up getting selected in that way. At the end of the day, they were going to be in trouble.
Mm-hmm.
And so, of course, he's a small business owner. They do well, but they're still small business. And so what we ended up doing was like, okay, so since of course budget is always an issue, and his margins are what we call tight. So he doesn't make a huge profit margin over and above his expenses. So
Mm-hmm.
we said, okay, you know what? That's not a problem. Let's look at what are all the costs that go into producing that person's pay. And then we would have to lower that person's hourly rate. However, the benefit to that person is that now a significant portion of their taxes is getting paid on their behalf. So this way, the out of pocket for the owner, total out of pocket for the owner, was still going to be the $50 an hour.
Mm-hmm.
A portion of the person's self-employment tax, or which is really just Social Security and Medicare, was going to get paid on their behalf. So now they don't have to worry about that part when they do their taxes on
Mm-hmm.
as far as like the employee side. And the employer is now in compliance. They don't have to worry about whether or not the Department of Labor or the IRS or anybody else is going to be coming after them for any money, because they're going to be in compliance as far as the law is concerned. And guess what? It's not going to cost them anything more than what they were paying that contractor originally.
Okay.
We've even gone so far with some of our clients to do an actual budget and a budget analysis,
Mm-hmm.
where they had a contract. I had a client, he was bidding on a contract. They do cleaning services.
Mm-hmm.
So what we did in his case was we took not only the amount, so we looked at how much they were going to make on the contract, of course, but then we took how much they needed to pay their employees, the Social Security, the Medicare, the workers' comp, like you had mentioned earlier, and we even were able to take into account liability insurance, because cleaning services, there's usually your liability insurance is also affected by the number of employees or the amount of payroll you pay out, right? So we took all those components and we boiled them down and we figured out, okay, based on the amount of profit margin that he needs to make, just because this small business is how he makes money, this is how he pays his rent and this is how he pays his electric and stuff too. So, he's got to make a margin, he's got to make a profit, right?
Right.
So we figured all that out. And then we were able to tell him, okay, look, this is what you can afford to pay any employees who come to you. This is the amount you can afford and still stay within a reasonable profit margin and make sure that you're pricing out properly. And so at the end of the day, he ended up actually on his bid, he ended up bidding a little bit higher than the amount that they were originally going to bid. But he also was able to show that company all the value, the extra value of having people that are in compliance, the fact that he has, some different certifications and things like that. But basically he was able to like really pitch it from a standpoint of, and I think their company is a green company. So he did a bunch of different other things to like pitch about why paying a little bit more was going to be a huge benefit to this company that he was pitching to. And he actually won the contract. So I think that sometimes people will make small business owners feel like, one, that they have to do what everybody else is doing. And that's not necessarily true. You can still make money and do well without doing what everybody else is doing. Sometimes when you're figuring out, oh, I'll never get the right type of employees if I don't pay a certain amount. And that's not always the case. We've had clients that were small business owners that were able to, instead of paying more salary, give a more flexible schedule, like you were talking about earlier, or they were able to do things like have paid time off, or have comp time, or it was just a bunch of different things that they were able to offer instead of offering higher pay. And then that way they were able to keep that pay and the payroll cost as a whole within a certain budgeted amount so that they could still make the margin that they need to make in order to be able to pay themselves and pay their own bills. So I do think that it becomes really important to look at, there's a lot of different factors to look at, and strictly just looking at, okay, what's going to be the easiest thing that's going to get me the quickest result, it may not necessarily be the best thing for your company as a whole. And it could put you in a position, like we said earlier, of you being audited, of things going really, really wrong, and the Department of Labor or the IRS unfortunately being a contributor to your business no longer being a small business. So
Absolutely.
yeah. So let's see. My next question. A lot of business owners say that somebody is a contractor or wants to be a contractor because they want flexibility. They don't want to be tied down to a specific company or whatever. So from an HR standpoint, what are the actual things that actually make that person a contractor? And I know you went over a little bit of it before, but like if you had to like put together, I guess, like a checklist, what would be the things that you would say, okay, these are the things I need you to look at, and if they meet these qualifications, you're probably okay. But if they don't meet these qualifications, you're definitely not okay. And we need to come up with a new plan.
Yeah, the funny thing is, I hear that all the time with my clients, and I'm working with a client right now that said the same thing. The employees wanted flexibility, and they wanted to be able to pay their taxes at the end of the year. And I said, well, that's great, but that doesn't put them at risk at all. It puts you at risk as a business owner. So, and here's why: the business has the they have the onus to pay the taxes, like you were talking about, the federal, state, and the personal taxes that that 7.5% for on behalf of that employee. Now, if you, as the employer, you don't do that, then now you are subject to penalties and fines and being responsible for paying the entire 15% of that employer's taxes. And the employer is the employee is scot free. They walk away and there's no risk there. So, and they don't have to pay their taxes at the end of the year. But guess what? The onus is not on you. It's on them as an employee, but it doesn't affect you. So here's what I would say. If an employee comes to you and say, hey, I really want the flexibility of being able to pay my own taxes and I want to have a 1099. First and foremost, do they have an EIN number? If they don't, the answer is probably no. It should be anyway. And then two, are they truly doing like contractor work? Is this just a job for a period of time? Not that you're a painter and you have jobs here and there. That's not a true 1099. If they worked with you for 3 to 5 years, even 1 year, if an employee has worked for you for greater than 12 months or greater, they are an employee, right? That's how the IRS is going to look at that. So that's another thing. Are you telling that employee when to show up for work, when to take a lunch break? Even if you say, well, you can take your lunch break whenever you want, but if you're telling them that they need to work from 8 to 5, they are an employee. So if you are dictating any of their time, they are an employee. And so those are some of the things that you should be checking off. Number one, if they don't have an EIN number and you're paying them through their Social Security number, 9 times out of 10, the IRS is going to look at them as an employee. And then what's going to happen is you're going to need a person like me and a person like Maya to come in and fix all your problems. And we'll be working directly with that auditor to make sure that things are done on time and as satisfaction to the auditor. And we can potentially get ahead of that auditor and make some of these things go away for you, but it's going to cost you a lot more money in the end if you are reactive than it would in the beginning if you were proactive. So don't take the chance.
Got it. And so what I hear you saying is like, number one, do they have a legitimate business? If they don't have a legitimate business name with an EIN number, they don't have a legitimate business. The likelihood of them being considered an independent contractor is very low in that case. And are you controlling their time? If you're setting specific hours, it's one thing to say, hey, I need this done in a week or I need this done in 2 weeks. It's something totally different to say, hey, I need you here from 9 to 5, or I need you here from even, 1 to 10 or whatever, like that.
Right.
That's just a different, that is a different dynamic than, just giving somebody, when you drop something off at Office Depot and you say, hey, I need this in a couple of days. And they say, okay, no problem. That's an independent contractor, right?
Right.
But when it's something where you're saying, okay, well, I need this amount of your time. I need this amount of your presence. That's definitely a different thing. I know a couple other things that we've talked about with some of our clients too was also the pricing. I think a lot of people like the amount that person gets paid, and I think a lot of people, there's a lot of confusion around that, but I know for us, we're just like, okay, does this person have published pricing? Do they have their own website? They got published pricing, or do they have a flyer and says, okay, this is how much I charge to do this? Or are you, as the employer, saying, hey, this is how much I'm gonna pay you to do this, or did you say, hey, this is how much I'm gonna pay you? And they said, oh, I'm sorry, these are my prices, and here's my business, my legitimate business, and my EIN. Okay, that person is probably a contractor. But setting that pricing thing, I think, is something that people don't really sometimes pay attention to. And I'd be curious to hear, like, on your end, like, how often do you run into that as also being kind of part of the problem?
So more often than not, because actually most contractors don't have pricing because they're an employee.
That is a good point.
They're not running a business. They don't have the EIN number. They don't have a business name. They don't have a website. They don't have anything to dictate that they are an actual business. And my advice to you is, if you know for sure that they're not running a business, then you need to pay them as an employee.
Yeah, I agree 100%. So as companies are growing, what are you finding, like how do make like making the let me see how to say this. How does misstepping in this arena, how does that affect companies as maybe they are, they've grown a little bit and now they're actually wanting to scale their business, or they're wanting to, get bigger and really have like a really healthy growth model. How is, making having missteps in these other areas, how is that affecting those companies that are still small businesses, but they're really at that point where they're like ready to, get it in, and they're trying to really scale their business.
Yeah, I would say the first and foremost is have a solid foundation under you, making sure that you are truly compliant, making sure you have policies, procedures, employees handbooks, making sure that all your employees are legal to work in the United States. That's another thing. We forget about that. It was like, oh well, I'm small business. I have my cousin who's not registered to work or eligible to work in the United States, but I'm going to hire him anyway. So that will shut your business down quickly. So make sure everyone has a legitimate social security number. Now, if someone has a fake social security number, there's nothing you can do about that. But
Yeah.
one way to verify that is e-verify, if you use that. But and or making sure they complete that I-9, and that I-9 needs to be completed within 3 days of the hiring date. If they do not complete it on that by that third day, when they show up the fourth day, you need to invite them back home. You need to invite them to the door, because again, that's another thing that will the IRS, the Department of Labor will come a knocking, and you are at fault, not the employee. It's you, the employer.
Yeah, and we actually had a situation, gosh, this is a while ago, where, and this one wasn't our situation. It actually was there was a whole news article around it, where people having um fake social security numbers or fake green cards or whatever,
Mhm.
and they were working for a very large company, very large national company. And if I remember correctly, the number was like there was like 5,000 employees or something like that.
Mhm.
Well, the fines around that, like you were talking about earlier, it's $500 per infraction
Mhm.
per employee.
Mhm.
So it ended up being basically I think this happened like over a course of like 3 years. So it was 3 years times 5,000 employees times $500 each. I
Mhm.
don't even know what the math is on that, but it's just like a lot of money, right?
Yeah.
And so yeah, it was pretty huge. Now, luckily for this particular company, they're a multi-billion-dollar company, so they paid it and licked their wounds and moved on. But yeah, for a small business, I could see how that could be really devastating if you have a lot of contractors or people listed as contractors, and you're not taking the time to e-verify them, or to have them have your accountant or your administrator, show them how to use the e-verify, and make sure that the names and the social security numbers match up, so that you're just not putting yourself into a predicament or to a bad position. So
Right. And to add a little more to that, it's not just your active employees. They will go back into your entire payroll to find out your inactive employees as well, and that they will be part of that infraction. So again,
mm,
when you talk about hiring or starting a business, let's start with a clean, solid foundation. And having a good HR consultant can really help set that stage for you, so that you're building your house on solid foundation. And it's not like, the three little pigs, you huff and we blow your house down. So once
yeah,
your house is blown down, it's harder and it's more expensive to fix those problems. So
yeah.
we want to be proactive to make sure all of the things are in place before you start growing and scaling. And then that way you can do it properly and you can run your business with ease and confidence.
Agreed, agreed. And there's one other thing I wanted to mention, that we've been having a relatively challenging time with getting our small business owners to also remember to get your paperwork before you let people start working, please.
Yes.
Please get your paperwork first. um, and I get it, unfortunately, as a small business owner, sometimes by the time you hire, a lot of times you're hiring at the last minute. Why? Because you're trying to save money. So you're not trying to hire people until you absolutely have to. You don't have no choice, right?
Mm-hmm.
And so because you're hiring people at the last minute, then you're anxious for them to get started. It's like, no, I needed you to start yesterday, right?
Mm-hmm.
Um, and so that can sometimes entice you to just, oh, just start working and then I'll get the paperwork later. And then
Mm-hmm.
sometimes later doesn't happen, or sometimes later happens so far down the line that the person is like, well, I'm not, I don't even work for you anymore. I'm not giving you my social. I'm not giving you my information. And so it's just really important, guys. Give them their paperwork, make them fill it out, and don't let them start, because every state is different. But like here in Georgia, what some employers will try to do is they'll say, okay, well, I'll give you your paycheck when you give me my paperwork. And that's actually illegal. Just so you know, it is actually illegal.
For sure.
You cannot do that. And the reason you cannot do that is because at that point, the service has already been rendered. So
Mm-hmm.
at the point when the service is rendered, you are legally obligated according to labor law to actually pay that person. You cannot hold back on their pay because they decided that they didn't want to give you their paperwork.
Yeah.
You are still obligated to give them their money. And
Mm-hmm.
so just be mindful that, you're not putting yourself into a position that could get you into a lot of trouble
Yeah.
because you decided that you didn't want to give that person their pay because they didn't give you their paperwork. Unfortunately, it doesn't work that way.
One
So,
of the big questions that will be asked if they go take it further, the employee takes it further. One of the questions that will be asked of you: how do you have a paycheck to give them if you don't have the proper paperwork to show that they were employed with you?
yep. Yep. And that includes contractors, guys. Like, even when you have a legitimate contractor,
Yeah.
understand that you need to have those W-9s. And sometimes you don't know if that person's going to make $600 from you. I had a client who had a legitimate contractor. The person comes and like does a little service thing, and then they're gone. And then, they might call them back like, oh, hey, we need this other thing done or whatever. And so the guy came, I think he worked one time in January, he worked in March or May. He worked one time in May, and then he worked one time in December. And
Mm-hmm.
each time he was only working for a couple of days. So he was a legitimate contractor. So when the guy came in January, he made like maybe $350. When he came back in May, I think he made like another like $400, and then he came back in December, and he made like another $600. So my thing is, when he asked the guy to do whatever he had him do in January or in the beginning of the year, he had no clue how much he was going to pay that guy. He was only paying the guy $350 in the beginning, so he had no indication that he was going to be paying him over $600 before the end of the year. And yet, by the end of the year, he had paid him well over $600. And so, and then we had to go back and ask the guy for the W-9 and blah, blah, blah. And luckily, the guy was amicable. He went ahead and gave it to us, didn't give us a hard time. But hey, I've seen it go the other way too, where the person was just like, no, I'm not giving you my information. I don't even work for you anymore. Blah, 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 blah.
Uh-huh.
So,
Uh-huh. For sure. For
yeah,
sure.
you just have to really be careful about that and make sure you're getting documentation in advance, not
Right.
after.
Exactly. So, question for you on that note: how
Yep.
does payroll reporting connect to what eventually shows up in their tax return for an employer?
So, really, for an employer, it does just for the most part show up as, an expense, just like any other expense.
Gotcha.
But I think where people it's kind of like what we just talked about, where people kind of mess up or miss out on is this whole thing of documentation that you need to
Mhm.
have in place, so that, one, if you're audited, but also just so that you're in compliance, so
Mhm.
that, like we said before, the best audit position to be in is IRS or Department of Labor comes knocking on your door and they say, "Hey, we want," and you say, "Oh, you want A, B, C, and D? Okay, here's A, here's B, here's C. Package it up, give it to them." They look at it, they're like, "Oh, perfect order," and they go on about their business.
Mhm.
That is like the audit position that everybody wants to be in. If you have to deal with an audit, you don't want to be in a position of you're scrambling trying to like dig through boxes and papers and files, whether they're digital or otherwise, trying to figure out, okay, how can we show where that money went, or how that money was spent, or
Mhm.
that this person is legitimately this or that or the other, or where can I find this paper? Like, you don't want to be doing that. You want a definitive, traceable paper trail, so that at the end of the day, you're not, running around in circles trying to justify the numbers or justify what you've done or what you said. And so I really think that it's really all of the underlining paper trail pieces that
Mhm.
actually are the more important part. Because at the end of the day, when you're looking at the tax return, it's just going to be, you're going to see contract labor, you're going to see your employees' salary and wages, you're going to see those things as just expenses. It's the other side of it, the actual compliance part, so that you can make sure that you're protecting yourself
Yeah.
from an audit. That's the part that's really where you have to pay attention, so that you don't end up in trouble, and you don't end up, like we've talked about earlier, with either a huge tax and penalty liability, or you don't end up with a situation where you're just struggling because you didn't have things set up the proper way, and now the IRS and the Department of Labor are gunning for you.
And I always ask my clients, if the Department of Labor or even the IRS knocked on your door and cordially invited you to an audit, would you invite them in for a cup of coffee, or would you freak out and be running around like a chicken with your head cut off and in sheer panic? So, and it's usually the latter, because not many people are prepared for the auditors that will eventually find you. It's not if, it's when.
Yeah, unfortunately, that is usually how it works out. So even though the tax law conversation that we've been having, that even though we've been kind of talking about like the compliance components and all that kind of stuff,
Mhm.
um, when it comes to specifically, the the tax law and how Congress has framed it, and the compliance, I guess, burden that is now being placed on the IRS and the Department of Labor. How does, let me see how to phrase this. How does HR, um, like, how do you guys become like a part of the conversation, so that, and a part of the discussion, so that employers are, not getting, they're becoming more proactive and less reactive, like they're getting, like, how do we integrate you guys into the conversation? And I guess, I know that we say, okay, every level of small business needs, some HR
Mhm.
advisement. But I guess, my question is, how do we integrate you into that conversation? But also, at what level is it like, okay, you definitely, you got to make an appointment with me, because, somebody making $15,000 a year part-time in a small business, and they've got, maybe, their cousin doing their social media, like that's it, right? um, they, they could probably use maybe a little bit of advice, from YouTube or something like that, but they may
Mhm.
not necessarily need like an actual, but like maybe like a couple clients that we've even worked on together, like they're making they're making big money, and now they're almost at the point where it's almost like we're behind the curve on
Yeah.
them, right? So like looking at those two dynamics, of somebody being like behind the curve because they're way up here, and
Mhm.
somebody being like, well, you could probably take a few little, courses, or maybe I can send
Yeah.
you like a video real quick, and you could pretty much, handle what you have going on. Like when we're looking at those two dynamics, like at what point do we need to integrate you, and like how, like what's the best way to start like integrating somebody of your caliber into that conversation?
Oh, absolutely. So, 0 to 250,000, we can just like I can send you some videos. We could talk strategy, right? You don't necessarily have to implement all of the strategy, but you need to start thinking about something, because at 250,000, you probably have one or two employees, right? So we really want to help you build that foundation so that you are prepared to scale. By the time you hit around 350 to 550,000, we really need to start talking about compliance issues and really start digging in there. The minute you are at 1 million, you're behind the ball.
Okay.
And that's the biggest thing. Like I said, people often think that HR is reserved for larger companies, but I always say larger companies have like an HR team, HR department, and
Mhm.
labor lawyers behind their belt. But you as a small employee, it's just you, and you may have someone doing your HR, right? So say for someone that's hiring a couple people here or there, or they're doing my payroll, say, oh, I'm covered in HR, in HR world. But I always tell my clients, if that's all you're doing from an HR standpoint, you have a bigger risk than you think. So,
Got
and
it.
I always say, like, let's build the foundation, meaning that we have all of our policies and employee handbooks, and building out expectations, even understanding what are you hiring someone into, because
Mm.
small companies, they were like, oh, I'm getting really busy, I need to hire someone. And then, yeah, they bring someone on board, but there's no defined job description to say this is what this employee will be doing. And you have all these thoughts in your head that you're expecting this person to do, but you're not communicating that because you're still busy doing all the things in the business.
Yeah.
And then you're looking at this person frustrated, like, I'm paying you, but you're not getting the job done. It's because you're not
Mm.
communicating, and there's not a clear description and expectation of what this person needs to do. So before you even start thinking about hiring people, let's just have a candid conversation to talk about workforce projections, right? Headcount projections. You're scaling, and you're looking to grow 50% over the next year. How many people will that take to get those things done? This is where it comes from, the HR.
Right.
And then so what is that person going to do? How much is that person going to cost you? And then will you eventually lift and shift yourself out of the day-to-day operations and become the ideas person and the decision makers? Or are you still tied into the day-to-day as a working leader? So those are all the
Mm.
things that an HR consultant like me can help you with.
Awesome. Okay, great. Thank you so
Mhm.
much. Thank you for being willing to come on and talk to everybody about this, because I do think, like I said before, that it really is an important topic. It's something that I think that small business owners don't necessarily think about,
Mhm.
especially when they're smaller. And I think, unfortunately, as they get bigger, they're so, like you said, with their head down doing the thing, and getting the things done, and trying to get their people to do the work and do the thing, that unfortunately they sometimes really miss the fact that they are setting themselves up to possibly be looked at by the IRS. And you know that saying, more money, more problems. The bigger your company gets, the more money your company's making, the bigger the bullseye on your back. So yeah, it becomes really important to make sure that you're in compliance, that you're doing the things that need to be done, and that you get somebody on your team, guys, like my friend here, Miss Necole,
Yeah.
get somebody on your team like her that will, come in and just not coddle you, not, tell you what you want to hear, but give you the honest truth about, how things need to be structured so
Yeah.
that your company has a truly firm foundation that you can build on. So make sure you join us on our next episode, because of the tax legislation, and we're, in the process of the IRS getting themselves together and finishing up getting the e-filing systems up and running and getting ready for this new tax season. Again, a reminder, it's supposed to start January 26th. So make sure that you are getting yourself prepared for the official open of tax season. Happy tax season! Make sure you're getting yourself ready for that. And we are going to be putting out quite a bit of content. Hopefully, we're going to be coming live to you guys twice a week minimum for the next couple weeks to get you guys ready for this tax season and to help you to understand what is in the tax law, what is actually going to be beneficial, what is maybe a little bit more hype than actual substance,
Yes.
and those things that you just want to make sure that you're aware of, and also help you guys as small business owners to get your guys's, get your financial and business house in order so that you will have a firm foundation from which you can grow and scale your business, where you can make firm and very informed strategic decisions for the that are going to be the best decisions for your specific situation and your specific business. So thank you guys again for joining us. Thank you, Necole. Did you have any closing words or anything you wanted to say?
So I just wanted to say, if you find yourself in a position where you need some support from an HR consultant perspective, feel free to reach out to me. I can be reached at Necole, Necole .Matlock at strategichrdevelopment.com, or you can check out my website at strategichrdevelopment.com. And or if you want to just give me your phone call or shoot me a text message, I can be reached at 630-280-1800. Thank you,
And
Mark.
oh,
Oh,
you're so I'm saying we will have all of her information also in the show notes and in the description. So definitely check that out so that you can get a hold of Necole if you need that extra guidance. And also if you need extra guidance with just understanding how the tax law applies to you and your specific situation, we have a link also in the bio as well as in the show notes where you can book a call with us as well to go over anything tax related that we can possibly help you with. So,
yes.
all
And
right.
if you, and then we can tag team it with you if you need both parts. So we are a dynamic dual team. So Maya, thank you so much for having me on, and it's been such a pleasure to meet your audience today.
Well, thank you for being here. And again, guys, make sure you check out those show notes, check out those links, and we look forward to seeing you guys on the next episode. Bye
Yes.
now.
Bye.